Hello everyone, welcome back to Upside Down Data. Well, we've had another brutal day in the market. Overnight Bitcoin dropped all the way down to 25.3K, which was really the things that we have been worried about here in the channel for the last while here, as we've been looking at the lack of technical support that's existed below these summer lows. There wasn't a whole lot to catch us. Now, fortunately, we did catch a bounce back up to, as I'm recording this now, 28K level. But as we mentioned before, if we just look at the volume profile here, there's not a whole lot of technical support down here, and similarly on chain, not a whole lot of coins that are sitting down there. So we're gonna have to wait and see what happens. But those are just a few things to look at. I think when we're thinking about what's going on now, if this is the capitulation, there's some other levels that people are going to be talking about that I think are worth discussing here as well. And one of the key levels that a lot of people are going to be watching as Bitcoin is having this crashing moment is the 200-week moving average. A lot of people look at this as oftentimes marking the bottom of capitulation events. It acted as key support back here in the 2014-2015 bear market, acted as key support in the final capitulation here in 2018. It acted as rough support during the March 2020 crash, and a lot of people are already talking about how they expect it to come into play again in this capitulation down. So the 200-week moving average is currently sitting at 21.8K. So still sitting a decent amount below where we are right now. So as I record this, it is still 22% below current prices. So price would have to crash another 22% or so before we'd be retesting that level. But it's also important to note that we wouldn't actually have to see price fall at all to still eventually test the 200-week, right? The 200-week will continue to rise from here because price is above it in more recent times than below. So as we lose these earlier candles and add in these later candles, that'll be pulling up the 200-week moving average. So that'll be on a course up. So price could just kind of dice around at these lower levels and eventually meet up with the 200-week. So we wouldn't necessarily have to see a capitulation down all the way to here to eventually have the 200-week come into play. Now, I don't know which of those is more likely, but it's just something that's important to note that when people talk about the 200-week moving average being in play, it doesn't mean that we have to immediately go crash down and test it for it to maybe ultimately act as support. If we look back at 2014, we had this initial capitulation, but then we kind of just went sideways, and then the 200-week kind of came up to meet the action during that period. So that could certainly, that also happened in 2018 as well, tested down here, then actually retested it at a higher price point. So we're gonna have to wait and see. Obviously, we don't know. Now, the main thing that I wanted to, so another thing I want to talk about as well here with these critical levels was to look at the 300-week moving average as well. And this is one that some folks have talked about because it was where the wick more or less bounced off of during the March 2020 crash. And so some people think that this could ultimately be something that could act as support or come into play as well. And my kind of thinking between these two is that it probably depends a lot on what the macro picture is doing when we're going down and testing it. If we crash right down to the 200-week right now, and there's no signs of anything changing with inflation, no signs of the US Fed changing their plans on raising interest rates, reducing their balance sheet, etc. And if the stock market is still crashing or falling down to the downside like it is right now, looking right now at the S&P 500, looking now at the NASDAQ, not pretty price action across either of these right now. And if that's still the macro backdrop when we'd be testing this level, I'd personally be less optimistic that it would absolutely be holding. I think there's some people who have a mindset that the second we hit the 200-week, that's guaranteed to be the bottom and they're just going to dump everything in. I personally think that being a little more nuanced might be wise at that point. Obviously not financial advice, navigate the way you see best fit. But personally, I would still be a little skeptical if the macro picture is as bleak as it currently is, and we're testing that level. And that's where something like the 300-week might be the next place we'd have to look. And the 300-week right now is at 16.1K. But again, the price could just chop along sideways for a while, and the 300-week would still eventually move up and might end up coming up to meet it eventually as well. So that's just something else to keep in mind as well. The price wouldn't necessarily have to fall all the way down there for the 300-week to come into play. And now the final level I want to talk about as well, which I think is important, is looking at on-chain data, looking at the long-term holder realized price, which is essentially the average cost basis of people who've been holding Bitcoin for more than 155 days. That's usually the cutoff that's used between short and long-term holders. And so what we can see is that long-term holders' cost basis, average cost basis right now, as a whole group, as a cohort, is at around 19.6K, so a little bit below 20K. And the reason why cost bases are important is that price fluctuations become more psychologically meaningful the closer they are to someone's cost basis. If price is falling down into your cost basis, the closer it gets, the more that you're going to feel that loss in value. And it might then either make people more willing to step in to try to defend their cost basis, so reload at that point, or, especially if you fall below it and you start feeling that loss below it, capitulate out. And if we were to see a big long-term holder capitulation here, that could be something that would drive price down even further, potentially. So we're going to have to wait and see, but that's just another critical level. We're still sitting $8,000 above, more than $8,000 above that level. But if we start getting down to that level, something that I'm going to start getting a little bit more concerned about. Now, the other thing I want to talk about, though, is what kind of recovery. So I'm of the mind personally that I think crypto, Bitcoin especially, will recover from this eventually. I think you're going to see a lot of takes. There are going to be some people who say it won't. I leave it up to you to make your own determination of what you think the long-term outlook for crypto is. But I personally think that given enough time, it will bounce back. But the shape of that bounce back, I think, is very much under debate. And you're going to see a lot of people floating a lot of different ideas. So that's what I want to talk about next. So the first idea that people are going to be potentially talking about, there's going to be some people who are going to be saying that we're going to see a V-shaped recovery, just like the March 2020 crash, right? So if we just take, a bar pattern here and we just overlay it on the current price action, we could say that this is what some people are calling for, essentially, more or less. That we're just going to, tank down. We might still have further to go, but then we're just going to V-shape bounce right back up, and then off to the races we're going to go again. Now, obviously that could happen, anything that can happen in crypto, but I personally am a little bit wary of that because of what has happened to lead to this capitulation, right? And I really think that the whole situation with Luna and UST has kind of changed the dynamics in the crypto space versus what it was just a little bit ago. Up until this point, my thesis, and I think frankly most people's understanding of what was going on in the market, was that macro concerns, macro difficulty for risk assets across the board was just affecting crypto as well as affecting Bitcoin, as Bitcoin is seen as a risk asset, and that was dragging the price down. But with the whole fiasco with Luna and UST, this is a little different, because now this is something internal to crypto that has blown up and has really burned a lot of people. And I very much empathize for anyone who had exposure to the UST or Luna ecosystems. This has been absolutely brutal to watch over the last few days. There are very few charts you're going to see where you see something as precipitous of a drawdown as this, falling, all the way down. You see just the absolute carnage of this, down from the beginning of this 99.99%. It's absolutely brutal, with Luna now trading below 1 cent. And when something like this happens, people aren't just going to forget about this immediately, right? I've said before, people have short memories in crypto. I still think that's probably going to be the case, but that's all relative, right? What do you mean, what in terms of what short memory means? And certainly anyone who got horribly burned by this whole fiasco is not just going to be immediately liking or willing, most likely, to just deploy right back into crypto. Or even if they do want to deploy back into crypto, they may have lost so much capital, they just don't have the resources to do it. And so really with these kind of V-shaped recoveries, the March 2020 crash, this is something exogenous to crypto. It's something completely outside of the crypto space. And so then when suddenly the rest of the market started looking more favorable again, when central banks started really intervening to try to prop back up equity markets, then crypto, there was no reason for people to really be all that skeptical of crypto because nothing had happened. There wasn't really anything from a fundamental perspective that had changed. It was really just that macro fear that had led to this capitulation. And then off to the races we went. Right now, it's a different story because we've just had this massive catastrophe. I think there's no other way of putting it. I mean, obviously, people debate how severe of a problem this is, but I don't think anyone can argue that for an entire ecosystem to go from around 40 billion in market cap down to what it is now is a pretty big catastrophe. That's a lot of value being wiped out in a very short amount of time. That's where I see these longer kind of recoveries being a little bit more likely. And I don't even necessarily know if these even fully capture how long it might take. But just to give us some perspective, we overlay the 2018 price action over where we are right now, we'd be looking at around October or September of this year before we might expect any moves back to the upside. And so that's just one thing. That's if that exact pattern were to play out again. And again, I don't know if that's representative of what it will take to get people regain investor confidence enough to really start pushing crypto back to the upside. We can take another price pattern here back from the 2014-2015 market, and if we just assume this is kind of the main capitulation wick, this would be putting it at February of next year before we really start targeting a course back to the upside. And again, that's assuming that either of those is diagnostic of what might happen. But I wanted to put those up just to give some other perspectives. I think you're going to see a lot of people talking about V-shaped recoveries and really trying to push this narrative that, you know, the bottom's in, people should be going all in because it's going to go pumping immediately. I personally am a lot more cautious. And I just think that the environment we're in is not at all like the environment we're in the last V-shaped recovery that we saw. And, you know, some people will compare it to 2018 because just like 2018, you know, we did see a pretty big drawdown in the stock market back in 2018. You know, we were down as much as around 20% back in 2018. And then this time now we're down at about basically 20%, you know, 19.73 as I'm recording this was the max drawdown here. So some people will say, okay, let's use 2018 as the base case. And that very well could play out. But again, the difference here as well is that in this capitulation in 2018, there wasn't an event like the UST meltdown that would undermine consumer confidence necessarily in crypto beyond just people having lost a lot of money in the drawdown. Here we kind of have a double whammy where people lost a lot of money just in asset valuations falling, but then there's been this kind of black swan event that might really shake people's trust, especially because it was in a stable coin. I think a lot of people just had no idea the risks that were involved in that whole dilemma. So that's kind of my current thinking is I think we're going to spend a while in the doldrums. I don't know if we have to correct further before we can find a bottom. I don't really know when that's going to be. And frankly, I think it's kind of a fool's errand to try to predict the exact bottom. There's going to be a lot of people who are trying to. A lot of people will say they know what's going on. I personally think that it's unlikely for anyone to be able to actually know what's going on. People will say it. Some people will happen to get it right. I personally just think it's a fool's errand to think that we can call the exact bottom here. But what I do think is going to happen is we're going to need to spend some time consolidating. We're going to spend some time with supply changing hands, the people who are less convicted in the space leaving, people with more conviction buying. That could set the stage for a move back to the upside. And we might just need to wait for this to kind of fade more into memory, to kind of fall out of people's minds for more fresh faces that want to come in before we can start turning that course back to the upside. Because again, when that many people get burned that badly, I think it's a little unrealistic to expect that people are just going to be as willing to just dump back into crypto and FOMO in when they perceive that kind of systemic risk. Now, again, I'm not going to make any strong claims of exactly how long we're going to have to spend down there because it's going to depend on a lot of factors. But I think a V-shaped recovery is unlikely. I think it's going to be at least later this year, you know, earliest possible in my opinion. Well, not possible, but earliest that's plausible in my opinion would be fall of this coming year, but it could stretch into next year before we can chart a path back up. And even when we do start moving back up, it might not be to all-time highs again. We could see another move like we did in 2019. Still a lot of gains to be realized there, but it could take even longer before new all-time highs get set again. It's just the unfortunate reality of what's happened in a lot of ways. Now, again, I think with people who have long-term horizons for crypto and for Bitcoin, you know, really all this does just gives more opportunity to accumulate. And so I do want to kind of touch on, you know, more. There's a lot of negativity in the space and negativity that people are expressing. The positive idea here is that if we don't get a full-on meltdown in the stock market and Bitcoin continues its overall bull run structure, you know, these are the moments where people make exceedingly large gains and really kind of life-changing gains in those levels. And again, I don't know when the exact bottom is. I don't know when it's going to happen. But if Bitcoin is going to continue its ultimate move back up, if it's going to continue growing as an asset class, you know, the kind of the silver lining of these capitulations, as brutal as they are to experience, is that accumulation in those zones historically has led to massive profit in the long run. So we're going to have to watch it. We're going to have to wait and see what happens. But if the macro picture starts to reverse later on in the year, and if market sentiment comes back, if more consumer confidence comes back, very possibly could start moving back to upside. Not financial advice. You should form your own opinions about how to navigate this space. That's just my current thinking. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. Put a lot of updates about our indicators and more over there.